Borrowing costs are going to continue to rise in the US as the Federal Reserve decided to look past a banking crisis and continue its campaign against inflation. Markets gritted teeth in anticipation of the 25 basis point increase announced on Wednesday. The base interest rate is now almost 5%, and that's up from near zero in February of last year. The Fed has acknowledged that its swift tightening of credit had caught some banks off guard. But while Fed Chairman Jerome Powell signaled that this may spell the beginning of the end for rate rises, Treasury Secretary Janet Yellen sent back stocks into a tailspin by suggesting a sector-wide guarantee for all deposits of any size at any bank was not in the cards.
Such a failure is deemed to create systemic risk, which I think of as the risk of a contagious bank run that we are likely to invoke the systemic risk exception, which permits the FDIC to protect all depositors, and that would be a case-by-case determination.
I understand.
I have not considered or discussed anything having to do with blanket insurance.
For more on this now, let's get to Danny Hewson, who is AJ Bell, financial analyst in Huddersfield, UK. Danny, thank you very much for being with us today. And I do want to ask you first, was the Fed's message really dovish, as some analysts have said? Because equity markets were really rallying at the beginning of the press conference, but then in the second half of the press conference, they tumbled. Was this linked to whatever Jerome Powell said? What happened there?
There was a real change in tone, and clearly compared with what we were expecting just a couple of weeks ago when a 50 basis point hike was on the cards, we've now got a 25 basis point hike. So things have changed, and the language was certainly softer. So some of the words that have been used previously, ongoing increases will be necessary, had been changed to additional policy firming may be necessary. The issue that markets had is when they took a look at the box plot, because the thought is now that there may be just one more rate hike, but then that those rates will stay higher for longer. In fact, staying high all the way through this year. I'm not expecting to see any kind of cuts until at least next year. And that, I think, is what spooked markets.
Right, interesting. What about the banking system? We saw bank stocks fall yesterday. Do you think the contagion is really contained for now?
I think markets had really believed that the contagion was contained. Certainly there was a degree of confidence back in markets, in the financial sector. We saw banking stocks up. And the fact that the ECB and now the Federal Reserve, and we're anticipating the Bank of England will follow suit at lunchtime today, the fact that they have all gone ahead with rate increases, whether or not slightly smaller like the Fed, they have gone ahead with these increases, is a measure of confidence that the banking sector is safe and secure. That said, clearly, the tightening that has been going on has been incredibly fast. It has put some banks, particularly those smaller US banks, under a great deal of stress. There has been a bit of a disconnect between the assets held and the deposits, and there is a real concern that some of those assets have gone down in value. But I think at the moment, the belief is that the contagion has been contained. And although Janet Yellen's comments have unsettled a little bit, I think also a lot of market watchers did think that if there was going to be a blanket protection of all deposits, that Congress would have to get involved.
Right, interesting. And all our eyes are absolutely on the Bank of England today as well. Danny Hewson, thank you very much. And now let's go to other top stories from around the world. China Evergrande has unveiled details of a $22.7 billion restructuring plan that calls creditors to swap their debt for new securities. The embattled property developer says the measures will help its efforts to resume operations and resolve issues onshore. Evergrande is the world's most indebted developer, with around $300 billion in liabilities, and defaulted on its debt in late 2021. Shares in Tencent jumped 7% after the Chinese tech giant reported better than expected quarterly results thanks to strong ad sales. Overall revenue in the 3 months to December increased slightly to $21 billion, reversing 2 consecutive quarters of decline. Ad revenues were mainly driven by e-commerce companies, fast-moving consumer goods, and games. And the US Securities and Exchange Commission has sued Chinese cryptocurrency entrepreneur Justin Sun, accusing him of illegally selling crypto securities and trade manipulation. 8 other celebrities and influencers, including YouTuber Jake Paul and actress Lindsay Lohan, have been accused of illegally promoting Sun's crypto assets. They have agreed to pay a total of more than $400,000 in penalties and interest to settle the charges. And that is all from Business for now.